Hey everyone, welcome to my YouTube channel. Making another video because it looks like I found something of interest to you guys, and I do have some information to share. I noticed here, I just put this video out about an hour ago, and already it's doing a lot better than all my other videos. So it's pretty obvious that you guys like technical analysis. So I'm gonna do another video now for Bitcoin. Before we get started, make sure you like and share the videos. Please subscribe to my YouTube channel. You can do that by clicking the little red square that's usually over here, and then click the little bell to get an alert. So again, as always, I just want to make sure you guys are aware. Look underneath the description. Look in here. I provide you a trading view link. Basically, you can use that service for free. But if you actually decide to upgrade, we'll both get some money out of it. So if you use this link here, you'll get some money, I'll get some money, and it's a really good tool to use. And in addition, there's the other information here, ways to get in touch with me, topics, some actions to take, and some of my other opportunities here. So again, like I said, it's pretty obvious that you guys like cryptocurrency technical analysis. So with that in mind, I'm gonna go ahead and make another video right now regarding Bitcoin. So you probably saw this in my last video that I just made. I talked about Cardano and I talked about Ethereum, but I kind of stayed away from talking. I didn't want to make the video any longer than it already was, so I didn't bother talking about Bitcoin. But what you'll see here is some things that I had drawn here, as price action was happening to see, breakouts of trend lines, breakdowns of trend lines, things of that nature. And on a larger scale, if you scroll out to the 4-day, you can see that I placed a triangle here. And the triangle is just based on higher lows or lower lows and higher highs, and basically you connect two lines together, and some people call it wedges. I decided to just use a triangle to take care of that. You can get that over here by selecting triangle pattern. So you can do some research on what that really means, but triangle patterns either break up or break down, and usually it's a continuation pattern in the direction of the trend. But you don't want to trade while actions within this. So as this bit was developed, I had earlier I had over here, and then when things started playing out, I connected this up, and this is what the pattern looked like. And you could see that there was rejection off these a couple times. It was rejection off these a couple times. And when it finally broke out, you typically want to wait for a retest. They break out and retest. So on the 4-hour chart, it looks like this. I mean, this is, it broke out, and it took like 6 days for it to come back and actually check to see if it was going to stay above or break down back into it. So you have to have patience. I mean, some people might have gotten in here. As long as you put your stop loss down here, you probably wouldn't have been stopped out. But realistically, what you're supposed to wait for is for it to come back down and then go, once it tests it and it breaches off of it, it's going to be a proven support line now. So in the past, it was resistance. It turns into support. And then at this point is where you really want to enter a high probability trade. So in order to determine the breakout and the price target of a triangle, you come back here and you use either a trend line or some tool, and you pretty much measure the distance from the top of the action, top here to the bottom here, basically the pivot point. You just draw it up and down instead of on an angle. And then you take it and then you kind of wait for wherever the price action breaks out. So if it broke out here, this is really where you would set that target. Even though you didn't get in until here, you usually place that line at the breakout point. So with that in mind, your target for this would have been at the 51.8-ish timeline, price level. Again, like I said, you don't know how fast it's going to get there, how long it's going to take to get there, but this is a good rule of thumb of where you should be considering scaling out of your position. Now, of course, it went much higher, and You know, you could have just moved up your stop loss to the next pivot below this low. You know, you could move it up and you could play that game, or you could just set this and just get out 50% here and then move up your stop loss to a guaranteed profit and then play around with the other 50%. You know, that's a typical idea that you can do. And again, you know, I didn't mention it, but I do want to mention that I'm not a financial advisor. You know, you guys got to decide what you do for yourself. I'm just sharing technical analysis on price action on charts. And you got to, you know, you got to learn that for yourself and decide what you want to do with that. So, but like I showed you in the last video, triangle patterns are very nice patterns to see on a chart and to place, and then you just wait for it to either break up or break down and take the trade. You don't want to take the trade in here. You really want to take it when it's breaking out. Now, if you go up to, so that's the first thing, right? So this is the target that you can see based on this triangle, and the base of the triangle is basically the height that you put at the breakout, and that's really the target that you should look to get out on. Now you can see as it went up, it did kind of plateau out at that level. So it is a realistic level that would have been a nice price target for you to just sell your position. Now, of course, you don't know if it's going to continue going up. So really, the strategy I apply is I have my long-term hold in Bitcoin, and then I have whatever I'm going to be trading. So there's two sets of money, right? The long-term that you're never going to get rid of, and then there's the money that you want to get in and get out and build up your stash of Bitcoin, or maybe when you get out, transfer it into an altcoin. Those kind of things. So one of the other things I wanted to show you on this chart, so the patterns are important, but another thing, again, just like I mentioned earlier, the Fibonacci is very important. So it's kind of declutter the chart a little bit. So this is the same triangle pattern, but now each candle is representing a day. So it just makes it a little easier to visualize here. So let me just get rid of this over here. This I want to kind of draw out real time with you. Just ignore those little lines that I have drawn there, because that was just, well, actually I could just delete these. I don't need these anymore. Let's just clean up the chart, make it nice. Okay, so I don't know what that was going to be there for, but let me get rid of that. All right, so you can see here on the daily chart how, if you put the moving averages in, you could also use them as a way to see what price action is doing. So the higher the level, if you go out to 1 day or the week, these moving averages tend to really show you where price should bounce. So regardless of Fibonacci or anything else, if you're just watching this moving average, you can see it's respected this moving average multiple times. And here it was kind of back and forth, but then it finally took off again. Now it's here. Now it's probably going to be back and forth a little bit, and then it's probably going to take off again. So that's one thing that you can use. You can use a moving average to kind of consider, find one that it's actually respecting, and then just wait for it to hit those areas to kind of consider possibly getting into a trade. Now, the other thing that, like I said in my last video, the other thing you really need to consider using is Fibonacci. Now, if you take this as the pivot low and this is the pivot high for Fibonacci, you'll see again how price action is attracted to these levels. So here it's at 0.5, it can go as low as 0.65, but if we want to consider the Elliott Wave idea, where the first retracement, the second one shouldn't go below the peak of the previous. So if that's the case, higher probability that it won't go any lower than this, which is like 42,000. Now, not saying that it won't just stop here and go up, but in terms of Elliott Wave, if you draw it out, start down here, that's 0, and then B is wave 1, and it goes down to wave 2, and now we're on wave 3, and now we got to figure out where wave 4 is going to go. I am probably suggesting that it won't go any lower than 0.55. And then we got to figure out what the right target for 5 is. Now, you can see like somewhere around this time frame is where, you know, if you're considering getting involved with Bitcoin, these are the areas where you might want to dollar cost average into a position. You know, buy some at 0.5, buy some at 0.55, buy some more at 0.65, you know, and get yourself a position set up so that when it does decide to move back up, you're in. You know, you never know when, like right now, it could just take off from here. You don't know that it's going to come down these lows. So you want to, you know, you want to dollar cost average in and get your position set up so that when it does take off, you didn't miss the boat. So in terms of selling though, you know, if you take the Fibonacci extension from here to here to, you know, to where it bounced off here, you just drag it across, you can see at least a 1.0 would be the first target. Like if, you know, if you got in down here or you got in on this breakout, you know, you could either use this as the target, which ironically is very close to the 1.0. So you see that? So this would be where you could have probably considered, you know, taking some profits at some level, either all or some of your position. You know, this would have been like the first obvious target for you to take. And then at that point, now you're waiting, you got out, now you're waiting for it to fall into this range for you to get back in. So you're, you know, you've cashed out here, now you're going to buy in that much lower, 52.8 to, you know, 45, you know, something like that. So you're getting in almost $10,000 cheaper, right? Not like $8,000 cheaper. But so now you're going to be able to get in and buy more than you did when you bought in originally, right? Because you sold out here. Now whatever you got from there, now you can buy more of it at this lower price. And now you're trying to figure out, okay, like I get in around here somewhere, where can it go? And what you do there is you can either use, there's two things you could do. You can use the target of taking from swing low here to swing high, and ironically I drew it almost exactly where that is. That could be a roundabout target that you can aim for without thinking too much about it. That, you know, the negative 23.6 could be a good target for you to sell after you get in down here. Again, this is not financial advice. This is just me looking at the charts, seeing what I see and showing you what I see. Again, you got to do your own thing. You got to decide what's right for you. But I want to show you how strong and how important Fibonacci retracement tools, Fibonacci extension tools. Let's try the Fibonacci extension tool. Let's see what happens here. So we take Fibonacci extension from here to here. Assume that it's going to come around here. Actually, no, you got to do the Fibonacci extension from the fall. So you do it from here to here to here. And then you can kind of see up here. See how this target of negative 23 is like in the middle of these? These are typical targets on extensions. You know, so you can very easily set your target. You know, the target price is going to be somewhere in this range, most likely, when this changes direction and goes back up. So you're going to get in somewhere down here, and you're going to look to get out somewhere up here, and that follows through here. Now this is assuming this is your trading account, right? This isn't your long-term hold, because this right here, when you look at this sequence of Elliott Wave, this right here really in a bigger picture, like the macro picture, this is just, think about this, this is just wave 1. And then this is, you know, of a bigger picture. So it's going to go, you know, let me just change this to kind of represent the fact that this is a, you know, a small one. So you're gonna have you know, so the conclusion of the first the 5-wave sequence that we're in right now is going to conclude on a 1 of a bigger time frame. So all of these 5 is equal to 1 of a bigger one, and then that bigger one is going to have, you know, let me just clear some of this up. So let's assume that that's where the for the first Elliott wave, that's where it ends, up here. Okay, let me just move this stuff out of the way. Now, assuming that that's the target of this 5-wave sequence, this is going to be the completion of the first of a bigger time frame Elliott wave. So what you do there is you take your retracement tool and you start back down in the bottom, but now you're going to set the second pivot up here. By you setting that pivot up there, which is the ending of the 5 of the smaller and the initiation of the first of the bigger, now you can kind of plot where you think this is going to retrace to. Now, if this is a strong trend, it's probably going to come somewhere around a 38.2, right? And then, as I said in the past, the next wave, 2 to 3, has to be equal to or greater than from 0 to 1. So if you take your tool and you take the distance from here to here, and now you shift it and you bring this up to where this wave 2 to 3 has to at least get to there, you're going to start seeing the crazy numbers. So wave 3 has to at least get there, if not go up higher. And with Elliott wave terminology, you know, wave 4 should not go any lower, or at least the wicks can happen to be lower, but the actual candle bodies should stay above the previous pivot. So from 1 to 2, now we're all the way up to 3, and worst case scenario comes all the way down to here, which still keeps Elliott wave alive. And now you can figure out where wave 5 is going to be. Now, just think about this. At the bigger scheme of things, there's going to be ups and downs along the way. You know, price action just doesn't go straight up like this. There's going to be ups and downs, but on average, it's going to work its way higher. And we don't know when this is going to occur, but you know, it's gonna go, either it's gonna go fast or it's gonna take longer to get there. Now, when this retraces down here, so you're gonna be up at close to 95K at wave 3, and then if things stay within the requirements of Elliott wave, it'll come back down to touch 65, 64, 65.4, 65.5. These are going to be like, you're going to look to get out over here, and you're going to look to buy back in over here. And again, this is for your trading account. Now, to determine where wave 5 can end, what you're going to do is you're going to do another extension, right? You're going to do the extension from all the way down here. Fib extension. So again, all the way down here to 3, and then back down to 4, and then you're going to see where the new targets are. So based on this, you know, it's going to go somewhere between 170 and 190. Based on Elliott wave theory. Now again, this could happen longer, you know, this could take longer to happen. Doesn't mean it has to happen fast. It could take longer to get drawn out. And then as well, this could also take, you know, it's probably not going to, I mean, this is going to be a really strong push if it's going to happen by the end of the year. But if you just kind of consider somewhere in between of these two numbers, and then kind of keep the same slopes, right? I mean, you see how this has gone up. Kind of keep the same slopes. If things happen faster, it happens faster, but the only assumption you can make is the slope that you've seen. So you really can't, you don't know when this is going to happen. You just know that to complete the larger scale Elliott wave, to the macro level 5, it's gonna form this kind of way. So some of your price targets are gonna be, and just realize this, you know, this is how it gets crazy. This right here can be the first leg of yet an even bigger one, right? This could be a number 1 of a bigger one. So that's how fractals are working. I'm not going to go this crazy, but this is probably what's going to get us up to like $300,000. I don't think it makes sense to do that right now. I guess we could. Let's do it. Let's do it. Let's see where this goes. All right, so what we need to do is we need to figure out let me get rid of this. So now for this new one, what we got to do is we got to use the Fibonacci tool again. Start down at the low. Go all the way up to 5. That allows us to set this price. You know, if you're going to assume it's going to be here, then that's the actually I got to change this. Let's go to maybe a super cycle actually. All right, so now we got you know, the ability to set the 1 to 2. Now we got to figure out where this can go, where this can go, and where this can go. And again, using the same principle, if you take your trend line and you set it to the low. And again, this is crude because I'm not zooming in to get the exact points because the points don't really exist right now. These are just estimates. So, but down here where price action actually happened, you really want to get in and get the details of where things have happened. Oh, where, all right, this is going to be a pain. All right, I'm going to do something different here because I'm going to be wasting too much of your time. Let's just do this again, and kind of just go a little bit higher just so I can get to it. All right, so that's estimating 1 to 1. So that means that the length of this leg should be the same. The next leg should be at least equal to, but not shorter than, the first leg. So that means that wave 2 to 3, 3 needs to at least get to this point. And then with 3 getting there, if it's going to retrace, you assume it's going to retrace worst case here. And then we use the Fibonacci tool again to figure out 5. So now what you're going to do, all right, let me get rid of some of these. So now to figure out this bigger time frame Fibonacci extension, you're going to take the Fibonacci extension tool and you're going to come down here, you're going to come here and then go here. And then you're going to come up here and you pretty quickly see where everyone's coming up with the $380,000 Bitcoin. This is how they're coming up with it. They're doing the analysis. They're figuring out that somewhere in between this range is where the bigger cycle Elliott Wave is going to terminate. And that's just making the assumptions. Things can change here, but to stick with the Elliott Wave theory, these are like the worst case scenario, or like, you know, this could go longer. Like if this goes up further, then, you know, then price action will push higher. But to be consistent with Elliott Wave, these are the requirements that have to be adhered to, meaning that the first leg, the second leg has to be equal to or greater than the first leg. And then from the extension tool, from 0 up to the first down to the 2, typical targets are between 0.618 and 0.414. So somewhere in this range, anywhere from 350,000 to 380,000 is the target based on Elliott Wave theory and Fibonacci retracements and Fibonacci extensions. So, you know, again, this could be years in the making, but I just wanted to, I kind of went down a rabbit hole with you guys here, but I wanted to show you that they're not just pulling numbers out of their butt. You know, they're applying technical analysis based on price action, where things are now, and then understanding the fractal nature of Elliott Wave and Fibonacci retracements applied to each one of those fractals is how they get you up here to this number. So this is just a big picture video to show you how to use Fibonacci retracement, Fibonacci extensions. I didn't even get involved with talking about resistance and support lines. I talked a little bit about the patterns, and the patterns that I showed you down here are going to show themselves all along the way. Again, don't think that price action is going to move up exactly like I have it drawn here. This is just, you know, if you superimpose like the average of what's happening, this is what the average is going to be. So you're going to have ups and downs. Things are going to happen. You know, it's going to keep bouncing off the trend line. It's going to, you know, it's going to retrace. You're going to have like crazy retracements. I mean, think about these retracements. You're going to go from $181,000 all the way down to 110. So this is going to be like a $70,000 retracement here. Over here, it gets even bigger, right? 283,000 down to 189. So that's almost 100,000. So think about these trading opportunities. If you get yourself in on the 3 to 4, getting involved, getting into a trade at somewhere around 4, and taking it out, you know, taking the ride up to 5, that's usually the biggest gains. And once it goes into an ABC correction, you know, you kind of just sitting tight. Unless you're into shorting, you could short. I totally would not do that in an uptrend. As they say, trend is your friend, so you don't really want to go against the trend. And I'm not a shorter. I'm a long-term bull for Bitcoin, so it's against my thought process to go negative on and trade on the downside. I'd rather just wait for the right moments to get involved on the level, you know, wave 4 or on the macro on wave 2 or on the super macro on wave 4, and, you know, kind of get in on those, get out on the peaks and get back in on the retracements, and follow the trend, right? So I hope this gave you a kind of big picture of where and how these guys are coming up with the numbers on Bitcoin, on how people are saying at least 100,000 and at least, you know, somewhere between 100,000 and 380,000 by the end of this year. Again, you don't know when this is going to happen, unfortunately. I have this drawn all the way out. I mean, I have this going, I don't even see the time frame, actually. I'm not sure why, but, you know, I've passed July of 22, so another year from now, I have shown this. In historical purposes, after this year, it typically goes into a bear run, so maybe 3 to 4. Maybe 3 to 4 is happening next year, and then this is setting itself up to happen during the next halving. You know, it may not happen as quick, you know, it may not happen this year, but, you know, the next 4 years, the next 10 years, this is how it's getting there. So along the way, for your long-term hold, just dollar cost average in, you know, for the money that you're going to keep there forever, or not forever, but longer term. And if you have a pot of money that you want to trade, kind of consider this idea of getting in and getting out using Fibonacci retracement, Fibonacci extensions to come up with the right entries and the right exits. All right, so I hope this helped you guys understand the big picture of where Bitcoin can go. I noticed right off the bat pretty quickly that you like this kind of video, so I'm putting together the other one, this one right here for you to look at as well. And I'll, you know, continue with my other content as well. And please comment in the video, like and share, and let me know maybe another coin that you want me to show you what I see. Again, this is just predictive, right? We're really, again, like I said earlier, what we want to do is we want to set traps, right? We don't know what's going to happen, but when you see a pattern arrive on a chart, you sit tight and you wait for it to show itself. So right here, you'd be waiting a while, but you got to be, you know, patient. And again, like I said with TradingView, you could do things like this. You can set a line here, And then instead of you sitting and watching the chart, all you do is you hit this and you set up an alert for when price action crosses that line to the upside. And now it's set, and you're going to get an alert on your phone, your email, whatever alert you set up. It's going to tell you, hey, you should take a look at this chart. It's happening. So again, you could set it to when it breaks, or touches the moving average. There's so many different tools within TradingView that you can use to kind of stop you from sitting in front of the charts. You do your analysis, you set up your suggested entries and exits, and you set the alarms to tell you to look at the chart. So you can go and do this on multiple charts, on multiple cryptos that you might be involved in, and just continue with your life and not sit in front of the charts all day. And when whatever you set up to happen, or what you're looking for it to happen, then you'll get an alert telling you, hey, it's happening, right? So that's the whole purpose of TradingView, to kind of, do the analysis, set up your alerts so that you can be told when what you think was supposed to happen is happening, or when something of interest is happening, you can come and look at it. Now, there's other services that you can buy that will provide you the various patterns. I mean, there's a bunch of patterns. There's wedges, there's head and shoulders, there's trend lines, there's harmonics, there's bat patterns, all these different things that you can apply to the charts. But the simplest, nicest ones are either wedge patterns, or ascending triangles, descending triangles, symmetrical triangles. Those are all high probability patterns that as you practice. And what you should do is you just go back in time and start drawing them out. I think back here I probably have some more that I was doing. Maybe not. I might have taken them off. But like, for example, if you were a person that wants to short Bitcoin, as price is doing its thing, you can set up a trend line, and when that trend line is broken, it broke here, it came back, it checked it. That might have been your signal to go short. And I mean, ironically, I picked one that went really bad, but this would have been a pretty good trade. And the same thing for the upside. If things are going down, like for example, let's just look at this real quick. Maybe you could draw a trend line going down here. You follow it down there. It's hitting. All of a sudden, it gave an impulse. These are good signs when you see something like this. And again, this is on the daily, so this is big picture. You should really be doing trend lines and stuff on the 1 hour or the 4 hour. So I don't know where yeah, I'm totally lost now. Yeah. All right. Well, anyway, I'm gonna end it there. But there's a lot of chart patterns that you can use. You can do the research. Just go on Google and search, chart patterns, and you can see what the triangle is. You can see what actually there's other ones, double bottoms and double tops, that are really good to use as well. When you see a double bottom, you could see that it's going to go up, and a double top, you could see it's going to come down. And when you notice them, they're like right here, like this right here. This is a little mini one, but you can see there's a W here. It went up, went down, it went back up, and then it went down. And what you do on a pattern like this is you wait for it to break the I guess it's called the neckline. And you would draw a line from here to here, and you would wait for it to come past that. Here, this is not a really good example, but there's M patterns. I'll find some more. I mean, I guess you could have taken a trade here, but you see it would have been you would have been like stomaching a move here, like, oh, is it going to really happen? And it finally happened down here, but again, just realize there's M's usually say it's going to go down, and W's usually say it's going to go up. So double bottoms usually say that there's going to be an uptrend, change in direction, and M's usually suggest that there's going to be a change from going up to going back down. and I can't really find one that's obvious right now. Maybe on a higher time frame. Yeah, it's not. Those are not as easy. I mean, you really could start seeing like you know, trend lines. Like for example, there's one here. Let me get rid of this. You know, you could start seeing that at a higher time frame. Again, this, and then if you did the Fibonacci on this, you know, you could probably see that it's going to ride its way down until this retracement hits the 60, 61 or 50 or 55. I think we talked about maybe 55 would be the point where this might change. So you could start seeing how price action will continue respecting this trend line, and then when it breaks, you know, that could be, again, here's another pattern that just popped out for me to see. This is bearish. A descending triangle is typically bearish. So what you're going to be waiting for here is, you know, price action came down, it bounced, and then it went back up, but nope, didn't go all the way up again. So more people are trying to sell again. Boom, nope. Some people came in to buy and went back up. Oh, no, people want to sell again, and now people are wanting to buy, and now it's sitting here. There's a high probability that it's going to break down. And breaking down again, what you would do, you would take it from here to here, and you would set it up to where, you know, the price breaks. And ironically, it looks like it's hitting a support structure from another triangle that I had. So realistically, if this breaks down and really goes south, it could go down as low as 30,000. So again, you never know which way this is going to go. This pattern may not play out the way it's. High probability on a descending triangle is downward. You get more, it's higher probable downside than upside on a descending triangle. And but the fact that we're in a bull run and there's money coming in, it could break, but it may not go as low as the target based on the pattern shows. You know, it may not go as low as it should, you know, as the width of the base shows. So again, you got to also consider support and resistance lines. So, you know, support and resistance lines, you know, maybe like 40,000, since there's some peaks here, and then there's a wick here. Although maybe it won't go any lower. Maybe there's enough support here to stop it from going any lower, and it's gonna start going back up now. Let's just look again. I know I said this video is over, but let's just look at something real quick. Let's look at this. Hey, see, I mean, I realistically think 40,000 is going to be the lowest. So if you're going to play this pattern, you know, I would say take some profits as it's approaching here, because there seems to be some support and resistance levels right here. You know, resistance on the way up, and then support on the way down here. So somewhere in the 61.8, and this is, like I said, this is typically the point where it changes direction. So if you're going to play short, you know, you don't want to be in it down here, because it's going to change direction most likely. If it's in the bull run, things are going to continue going up. You know, big money might be coming in at these lower ranges. They might think this is a good sale. And like off the top, I think historically, Bitcoin has experienced like a 40K between 29 and 30% decrease. So again, this is playing right into it, where, you know, right here, if it comes down this low, it's 33% down. I think historically, if you look, other than blow-off tops, like the end of the cycle, retracements down 30 to 40% is typical. So this is something else to consider, you know, the retracement level and how much percent down it is. I mean, to go down 40%, that's a lot. I really don't think it's going to happen. I think there's too much money coming into the markets for it to push down this low. But it is mapping up to 786. But 35,000, that's a big drop. Yeah, I don't know. just be careful, guys. I personally would not go negative on this. I don't do shorting. I don't short Bitcoin. If anything, just wait for it to come down here to look for the reversal to continue higher and get up to these higher numbers that I mentioned earlier. All right, guys. Again, this is not financial advice. This is just me showing stuff on the chart to you guys, so you can kind of see where the big picture numbers are coming in. I think I left the big one in here. Yeah. So this is the big cycle. This is what I think people are calling a super cycle. And yeah, so this is how they came up with that number. And you saw all the details that I showed you in the video. Just rewind it and look at it again. And I look forward to having you subscribe to my channel, connect with me on Facebook, check out my other videos, see if you're interested in some of the other opportunities, earning some cash. Also, there's Forex software that you can get involved in that will trade based on your settings, and there's settings that are low risk. I can't tell you how much you'll make, but you'll certainly cover the cost of the subscriptions if you depending on what you start with, and your settings. So again, that's going to be left up to you. I can't tell you or guarantee any kind of profits, but I've been doing well with it. And again, you got to make your own decision, but check out my videos in my channel, see what's good for you, and I'll see you in the next video. Take care.